Welcome to my video series on financial math. This is the introduction. I'm not going to have any technical details in the introduction, but then I'll follow with a series of videos on the topic of the mathematics behind various financial topics. In terms of background, this video series is targeted at people who are interested in learning about the mathematics behind basic financial concepts such as interest rates, annuities, loans, bonds, capital budgeting, as well as trained mathematicians looking to apply their skills to finance. The target audience includes individual investors, small business owners, and students of business and finance. Derivations of most of the stated formulas are provided in the text. The assumption is fairly minimal. You need to have some background in algebra and a little bit in calculus, which I'll go through. If you haven't seen calculus before, I'll try to focus on the formulas themselves, and then for those that have a little bit more background, you can follow in the additional details there. But for the most part, the required background is not too much, in my opinion. There's also several books that go into this topic in a lot more detail. I've listed them here. I'll put them in the reference to this video. These books are like 400 or 500 pages long. And the video series itself is based on a book I wrote. I'll give you a link to that on Amazon if you're interested in getting a paper copy. And I also make the electronic copy freely available. I'll put that link in the information to this video also. The other thing is I've written Python programs. They're fairly simple for most of these topics here, and I'll make that available too. I'll give you the link as we get to those. I'll give you the link for those. Okay, so on the next slide I want to go into a little more detail in terms of the topics we're going to cover. It still won't be exhaustive list, but it'll give you an idea of what's coming in the future videos. So here's the list, partial list of topics. There'll be some, probably just one video on the background, and that'll involve arithmetic progressions and geometric progressions, which are basically the basis for things like simple and compound interest. So I'll give you the background you need for that first, and then I'll get into interest. These are just some of the topics: simple, compound, continuous, present value, discounting. Then I'll talk about annuities. And again, these are just some of the topics there. I have quite a bit on this. Accumulated value, discounted or present value, annuities due, deferred annuities. Then we'll talk about repayment of loans, amortization, balloon loans, refinance. You know, when you buy a house at a certain interest rate and then the interest rate drops and you want to pay that first loan off and then refinance with a lower interest rate loan. Talk a little bit about bonds and then a little bit about capital budgeting. On this slide I have sort of a technical diagram, which we'll get into this in more detail at several points in the future videos, but I'll just show it to you here first. Don't be concerned if it kind of overwhelms you. It's not all that difficult. When you're doing various calculations, you usually have a focal date like present, today, and then you want to calculate how much your $1,000 is worth in the future under different conditions: simple interest, compound interest, continuous interest. Then you could also work backwards. If you have $1,000 now, what would you have needed 10 years ago in order to get to this point here? So it's kind of these things in reverse. And we'll look at these, each one of these in more detail in various videos. So I just want to give you this key diagram first, and we'll hit it multiple times. Eventually you'll see that it brings together a lot of the different concepts. Okay, so that's it for the intro, and we'll get into the background on my next video concerning the different types of progressions.